Good morning, everybody. Welcome to my trading game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So, first and foremost, we're seeing the futures rising a little bit this morning. The big question is, will we test that upper trend line on the S&P 500 that we've been talking about? We are still in that wedge pattern, but it's getting close. And the NASDAQ 100 has now hit its upper trend line. So it's really on watch today to see if the rally can continue. Now, end of quarter window dressing was over as of basically last week, right? Coming into this week, we now had the first of the month money flow yesterday from retail. It was not only the first of the month, but it was the first of the quarter. So it's usually a little bit more money flow. Today, again, you really won't say that, okay, this was new money flow from, 401ks or two 401ks or window dressing. This is going to be more of a realistic picture of the market. And we have to, as technicians, take note. Is it going to continue to grind up? Right now, it looks like that. But where are we at the end of the day? All right, lots to talk about today. Let's jump into the S&P futures here. This was yesterday's price action, so a pretty consistent rise to the upside. Overnight, basically flat to slow grind higher, with the S&P looking to open up nearly 20 points today. Now, 20 points isn't a big move by any stretch, but nonetheless, it is more upside at this point. Now, the question is, what will happen here? Well, let's go to the S&P 500 chart and flip over to the daily. Here is our daily zone. So again, yesterday we opened lower, and the buy the dippers slash new money coming in really kept this market rising. We saw the semiconductors really helping the market kind of get higher, even though other stocks continued to stay weak to lower. But when all was said and done, the S&P ended up about 0.33%. Can it continue up today? Will it tag the upper end of this trend line, which is sitting currently around 67.45, give or take a point? All right, so watch that level, 67.45. We'll be opening today around 67.30. So again, around 67.30, can from the open we gain 15 more points? If we do, we tag the upper trend line right here. Now, why is that important? Well, because this has been an important trend line going all the way back to 2023. It was support then it hit it in August of 2024, and it was support. Then it hit it again in January of 2025, and it was support. So 3 times it catapulted the markets up, and then we broke down during the Liberation Day sell-off and subsequent downside. We've then come all the way back underneath, hammered it once, and it pulled back. Only a 3-day, about 1% pullback. Now we're coming up to it again. What happens right at this level? Again, the approximate level is around 67.40, 45 area, right in that vicinity, depending on where that trend line is exactly. Let's watch today. Now, the QQQ. NASDAQ 100 was up over 1% yesterday. This was on the back of basically gains from the semiconductors. And I want to say this about the semiconductors. So the semiconductors continue to be very strong. We're seeing kind of the ancillary plays, the memory chip stuff going higher and higher, STX, WDC, those type of names. Micron had a big move yesterday. Then late in the day yesterday, there was news that Intel was going to start supplying AMD, or likely to supply AMD. Amazing how this news kind of trickles out here, and it's so positive for AMD. AMD has just become the golden child, if you will, all after the U.S. government got a 10% stake in them, mind you, about a month and a half ago. Makes you think. Favored? Maybe just a little bit. All right, in any case, it is neither here nor there. Intel rallied yesterday. Micron was up. AMD was up. Even Taiwan Semi, and this is interesting, folks. This shows you how bullish the market is that Taiwan Semi was going to lose the business from Intel while AMD gained it, and yet Taiwan Semi was still up about 3% yesterday. So it's buy everything related to semiconductors. We'll see if that continues. It is making for a big overbought scenarios in certain stocks, but we'll see when it all stops. So the QQQ is right up into this level again, folks. So we're right up into this trend line. This trend line is even more impressive because it goes back to the COVID lows. So the one on the S&P goes back to 2023. This one goes back to 2020. And we can see again that every time we hit this line, we've had big pullbacks. The question is, will it pull back this time or power through? All right, next up, let's take a look at the dollar. The dollar daily chart looks to be stuck between 98.60 on the DXY and this support level around 96.30 to 35. And again, right now, we've just continued to fade a little bit after that weak economic data yesterday. And just a reminder, yesterday, ADP came out negative 32,000 jobs, and the non-farm payrolls, which we usually get on Friday morning, will not be reported because of the government shutdown. Now, the one thing I was pointing out yesterday is that the ADP private sector is actually a more accurate representation. And I think it's so interesting because for the longest time, we were all like, oh, ADP, it's not as accurate. We want the real government numbers, right? And so ADP would come out weak, and then miraculously, the non-farm payrolls on the Friday after that would be very, very strong. And we're like, oh man, ADP really stinks as an indicator, right? And then miraculously, all the jobs numbers got revised way down, as we know, almost 1 million jobs less. And all of a sudden, it's like, wait a minute, ADP was actually really, really accurate. So going forward, I'm going to trust the ADP numbers more about the state of the economy. And I think more and more investors and analysts will do the same versus the government numbers. And I would actually encourage more private companies to start getting into the data collection business because it can be really important for the overall economic outlook. All right, the 10-year yield flat right now, basically hovering today. Notice this is the weekly chart, and we're still holding the line. Hold the line right here, right around 4.1%. And again, we're watching. Is this a bear flag? Is it going to break? Well, the economic numbers continue to weaken. It might, but right now it is holding steady on the 10-year right at 4.11%. Now, we did talk about the haves and the have-nots, right? So I think what's so interesting about this market is that the breadth of the market is starting to get thinner, at least in tech, meaning more and more tech stocks are breaking down. Meta's broken down. We've seen Netflix break down. But on the other side, NVIDIA continues to push higher. All right, so let's take a look at some of these stocks that are high flyers. This is the weekly chart of WDC. That, to me, my friends, is absolutely incredible in terms of its move to the upside. Like, look at that move to the upside. Absolute mammoth move here. This is, again, a weekly chart. So we'll have to see where it goes. But again, right now, it's looking to gap up again. This is something that will not sustain itself. It's like the rubber band effect. Remember, in technical analysis, you have to look at things like a rubber band. So you can stretch it, stretch it, stretch it, stretch it, stretch it, stretch it, stretch it. The more you stretch it, at some point it snaps back harder. All right. If it's a gentle grind higher, then the pullbacks are gentle. When it's a vertical move, the pullbacks are dramatic. And so just keep that in mind. Who knows how high WDC goes or STX? But overall, when they do pull back, you'll see mammoth pullbacks. And STX, very similar chart here in that same semiconductor memory group. And you can see the vertical nature that this stock has gone on. Now, speaking of which, so these are the halves, right? And we can even look at NVIDIA here. NVIDIA, by the way, NVIDIA, guys, I gave this to you guys I think it was either late last week or just the other day, but we talked about this trend line. This is the one I'm watching here, guys. This is the one to beat here. It's right around this 190.5 level. And look at where we're trading, 189.86. And so this is going to be a really interesting trend line because this trend line goes all the way back to the bull market major high of 2021, connects through these highs here, and goes right through the recent highs before that pullback. So do we get through this? In which case, okay, you're easily going over $200 per share, or does it stall out at this 190, 191 zone? And that will be something that I follow. So these are the halves. These are the haves versus the have-nots. What's the have-nots? Well, you got to just look at this chart on Netflix. That is not a good chart on Netflix, right? Netflix, major trend line going back to May. It kept hammering, and breaking to the downside. By the way, what type of pattern formation would you classify this as, guys? This is a good quiz. I love giving you guys quizzes in these because I think it helps you understand. You can see if you're right. I wish I had the Jeopardy theme playing, but obviously probably not allowed to use that music. But look at this. What type of pattern is that now? Is that an upside down cup and handle pattern? The answer is absolutely. And a cup and handle pattern upside down means it's likely heading lower. So just keep in mind, cup and handles, everyone can spot a cup and handle, right? But are you aware that you can look at the inverse, right? Every pattern has an inverse pattern formation that can play out. And in this case, this is now looking like Netflix is headed quite a bit lower on the charts. Other charts, look at Amazon. Amazon, great uptrend and a breakdown, now forming a bear flag. So again, you're starting to see how the rally in the market amongst tech is getting bifurcated, right? It's splitting apart. It's getting to be thinner and thinner on what stocks are carrying the market to the upside. Mainly the semiconductors are the main focus here. They are now valued. If you looked at the top 50, 60 semiconductors, $10 trillion plus in market cap. In fact, Nvidia alone is now worth 14%. It's 14% of the NASDAQ 100, just that one stock. That's incredible. Incredible. If you add a Broadcom in there, which is another $1 trillion, I mean, if you add a couple of these other ones, guys, I mean, you're literally, the semiconductors in the NASDAQ 100 now are like 25% of that entire index. It's pretty wild. So in any case, my point being is that there's more and more problems arising here in some of these names. Another one that's not tech, but look at Costco. Costco, I would look at as a leader in the retail sector, right? The retail consumer food group, maybe that in Walmart. And look at the chart. It's broken down. So again, these to me, I look at them and say, okay, listen, markets can continue to grind up. We have to watch that level on the S&P, but more and more big names are starting to break lower. RCL, this was amazing runner. I mean, literally from the April lows, it went from $160 to basically 360. I mean, for a cruise line to make this type of move, fantastic. But look what's happened. It broke down, bear flag, and it's starting to break down even more. All right. So again, these are the things that we want to pay attention to is, yes, the semis are strong, but what about everything else? What else is going on? I mean, and then you could say, okay, well, Microsoft, I mean, it's inched up a little bit over the late, but it hasn't really done much. So that's not doing much. What about Meta? Meta, head and shoulders breaking down, right? And so I guess my point is here, folks, is that while the markets clearly continue to grind up, insatiable buying, people leveraging, we know margin levels are at all-time highs. We know that individual investors are now more exposed to stocks than they ever have been before in terms of their total capital or their total wealth. And again, that's kind of scary alone. It shows you how all in people are in the market at this point. Remember, like in just before COVID, the whole complaint was, oh, the retail investor is not even in this market. Oh, now they're in, boy. Oh, now they're in. No doubt about it, which is usually when the rug gets pulled. And I've seen this before, mainly in 99 to 2000 was the last time. I remember everyone in 99 to 2000 was a day trader. That was just like, oh, we're day traders. Yeah, we day trade. We trade all these .com penny stocks. Like, we're day trading. And now what do you have? You have Robinhood essentially creating an atmosphere not only where you can day trade, but also gamble on politics, on sports, you name it. It's all coming to town, boys. All coming to town, boys and girls. All right. So now let's talk about some stocks that are buying opportunities. Because listen, a lot of these, I'm kind of sending a warning sign. I get that. But there are opportunities. In fact, one of the stocks that I've highlighted to my members and I've pounded on the table about is Pfizer. And did you guys see the move in Pfizer? Let's look at Pfizer here. Incredible rip higher. Again, this stock was at the low. I mean, look at this stock. Look at the basing pattern and look at this rip up. Incredible move. Why? Well, because they did a deal with the government, right? Basically, that's your ticket. If you have a stock that's been beaten down, just do some deal with the government, and all of a sudden, your stock's going to rip higher. For Pfizer, this is an amazing move. It's likely going to go higher. Has some resistance around 27.65 or so, but really, in reality, big moves here. And what this tells me is that there's going to be a catch-up trade here. And this might be the most important thing of this game plan, is to talk about, well, where are the next runners? Hard for me to buy STX. I'm not going to buy STX. I mean, up, what, 300% in the last 3 months? Can't buy it. Can't chase it. I know basically at some point it's coming in at 30, 40% retrace. But are there opportunities? And I actually think there are. Now, they're not risk-free because no investment's risk-free. But, I mean, frankly, Chipotle, beaten down back to levels not seen since 2021. Sure, it could go a little bit lower, but this is one that's been beaten down, is right into technical support. Keurig Dr. Pepper, look at these levels, down sloping. Look at the vertical drop on this. Now, their earnings were very good. It's just they're talking about splitting the company into two companies, a more of a drink company and a coffee company. Markets don't like that. Investors haven't liked it. But honestly, at this point, look at these trend lines converging. This looks really very interesting. And the cool thing about it is Pfizer pays a 7% dividend. So you're getting 7% and then you're making the upside. KDP pays a dividend. If it bounces 10%, you get 10% plus the dividend, right? So there are opportunities, and even UPS. I mean, really, when you have markets that are going insane to the upside, how do you not, like, at least for me as an investor, I mean, I look at this, right? And I look at just the technicals on this, and I say, okay, well, we have this low down here. Let's draw this in, and with this little pivot low, and then lo and behold, look at price. It's right on that support, and it's down from just where it was in 2021. It was a $230 stock, $80 stock. All right, this pays a dividend too, I believe. So again, you know, for me at least as an investor, there's always an area to put money into, and there's always an area to look to go short. So there's areas to go long and go short, both directions. Good example of this, by the way, was just a few months ago in these game plans. I was literally pounding the table on China stocks. I said, guys, the charts are getting ready to break out. They are mammoth breakout opportunities here. KWeb, Baba, Baidu, you name it. Holy cow. I mean, again, if any of you guys listen, I mean, look at these moves. Incredible. Look at Alibaba. I mean, incredible move. And these are my favorite patterns. So you have a low chart, and then you start to get these bigger pops. And then this was just beautiful here, how it consolidated on a technical analysis basis. I mean, just beautiful. Look at high pivot to high pivot, broke out, retraced, consolidated, and boom to the upside. So again, the point being is there's always opportunities. We just have to find them. And right now, if I'm looking to go long, I'm looking at the beaten down plays that haven't run yet. Are there other drug stocks that haven't run? I loved Biogen, but then Biogen ripped yesterday. I mean, look at this breakout on Biogen. Now, it's already had a big move up, so I'd have to wait for a retrace to the scene of the crime, but that's still incredible. All right, let's flip over to Bitcoin. Bitcoin is showing signs of life. It closed right on this 118 and change level yesterday. Let's watch to see, can we hold the gains today? Can it break this level? If it breaks this level, every time it's broken and confirmed above this level, we hit an all-time high. Hit an all-time high here. It closed above, and it confirmed, right? Then it broke back the low. Closed above, didn't confirm, confirmed, made a new all-time high. And so the idea is if you can confirm here, who am I to say you're not going to go up at least up to here and make a new all-time high? That's what the chart's telling me. So this, my friends, is so big right now. It is such a big level on Bitcoin. If you are a Bitcoin bull, follow that level. ETH is an interesting one. Take a look at ETH today. It's now tagging, or just tagged, the underbelly right here, right? And so again, this would be a little concerning on ETH because it has to break through this line. It was resistance, broke out and confirmed, retraced, support, broke up, broke down finally. Now it becomes resistance again. So this is very important for ETH, right around 4,450 to 4,500. It's got to get through that level, folks. Got to get through that level. So keep an eye on ETH here. We'll see if it can. Otherwise, you'd expect a rejection back to the downside. And gold. Now, gold is interesting. Almost a little topping tail yesterday. This candle's a little small for me to really believe that it's a true topping tail. One of the key things about topping tails, guys, is that you want to see a big tail. Like, it should be a big tail with like a body down here, right? This is a little one. And so anytime they're this small, I kind of have a question mark, right? Right? Question mark. That's the best I can do on my question marks. I apologize. But my point being is that it's more of a question mark of whether that's a real bottoming tail. We closed above, we confirmed, so we know this is major support now. Now, again, did it put in it? I'm gonna wait to see what today's does, because if today's gold closes above the high of that day, then it's obviously not a topping tail and it's negated anyways. So again, just little things like that we want to pay attention to on gold. Can silver finally get up to that target price of mine, which is basically 50 bucks? It is now hitting the lower level of my target. How many weeks have I talked about 48 to $50? I said, all right, 48 to 50 is where this is going. It has now achieved the low end of the target, piercing 48. I still think it's going to go higher. I still think, listen, it doesn't mean you can't pull back here, but this was the low from 1980 at 48. The low from 2011 was 50. You got to think it has a shot at 50 here with the momentum. All right, so keep an eye on 50. If it gets a little bit above 50, I will, and I do plan on shorting some because it's getting too extended. My short level is very easy. I connect these two highs, so my short level would be above 50, right around 50.65, 50.75 area, somewhere right in there. That would be where I would do a quick swing short. By the way, it's not the high of my cycle. I still think silver's going as high as 60 to 62 during this bull market. But in the meantime, again, it should pull back off that level. Oil has been a non-event for a little bit of time here, and it looks like, well, it's actually starting to come in here finally. Let's keep an eye on this. This will be first supported around $60.65. That is going to be a key level to watch, so monitor that one on oil. Natural gas broke out of that little cup and handle pattern. Let's see where it is today, and it continues to move up. And so again, for those of you learning patterns, there's your cup, and then handle is a nice consolidation, and there it goes to the upside. Bullish pattern formation on natural gas. Now, natural gas did hit this zone right up here. So again, there is some resistance, but I would not, at least for me, I am not shorting nat gas. A reason they call it the Widowmaker, frankly, because it can have major moves. All right, guys, listen, I'd love to get to questions today. I got a few. I'm going to save them for tomorrow, because I got to get to my trading room. The markets are about to open in about 7 minutes. I got to get ready. I got to get prepped. I got to have my levels and my orders out there. But as always, folks, thank you so much for tuning in. I do appreciate it. Talk to you soon. Take care.